Good afternoon, good evening, everyone. Today is Thursday. It is September 12th, 2024. Our goal here is to review the market generated information in a holistic fashion. We're intimately following the auction's narrative, both ES and in Q. If we have time, we'll theorize and add additional commentary towards the end. We did speculate in the market today. Please see our uploaded recording. It contains my real time analysis. We use these archives as a tool for our professional development. All right, perfect. Let's get started with our narrative questions and our summary questions. Where's the market coming from? What's the narrative of price and expectations? And what is price trying to accomplish today? All right, cool. So, zooming back, again, we'll look at the weekly candle. Do remember we had this fairly wide breakout with high volume to the downside out of that 2 week balance for the S&P 500. We appear to be gravitating our way back up to balance as we discussed yesterday in our video. Prior day was Wednesday, which was CPI. Lots of stuck sellers all in here trying to test that non-farm payrolls Friday, but failed and completely squeezed the majority of the day and for today as well. So really the goal was for buyers, if this is going to be in squeeze mode, to continue to one time frame protect their lows and make new highs if possible. Sellers ideally want to really just force it like a compression day, really just to stop the momentum, but that doesn't appear to yeah, that just didn't happen. So buyers at this point, buyers appear to be taking control over the narrative on the highest time frame, on the intermediate as well. Maybe that big slanting to the downside we're not seeing. We do have FOMC next week, but we won't speculate too hard for future events. We're just focusing on what's happening in the now. And though this was extremely aggressive on the for the bear case to the downside, this is quickly being retraced back to the upside in a very aggressive manner, very reminiscent to the August retrace. For a little better concept, let's look at the ES on the footprint. We can see we ended with about the same with the max with the delta, which ended up being 35K. The max was about 38K. Sellers never had a chance. Sellers were never in control, and the buyers finished with a heavy fight at the 70s. We're watching this in real time, and then a solid hold at the top of the day above the 5600s. Looking at the NQ, same situation here. Sellers tried. The minimum was 2,500 and the max was 500. But even though sellers were swarming, no result. And thus the squeeze continues. We had 300 points of range on the NQ and 67 for the S&P 500. There really wasn't much on the docket, not much for the earnings. For the data was the PPI, which came out for at 5:30. So this is definitely not as big as the CPI. And we did have a little bit of a SOC candle. We'll look at that shortly, but really not too much to speak of on it. Looking at the sector tracker, we understand that the sellers tried. And we can see that technology is actually not the leader today, nor is discretionary. It's actually communications, which is going to be Meta, Google, AT&T, T-Mobile, so on and so forth. Just our communication sector, almost up 2%, leaving the S&P 500 at 75 basis points positive. The laggards being real estate and utilities, and sadly the financials and the healthcare, they've really been taking a break recently. You can see they're some of the worst performers over the past 5 days, not necessarily for the month. But back to the day, solid day for communications. Nice to see this rotation and them leading for the day. We haven't seen that in a while. Everyone got some love today. Technology got to take a break. And I'm just curious to see how the top heavy hitters did. They pretty much just kept it chill. Okay. So we have more context for the top portion. We understand that the sellers just wanted to make the bleeding stop, we think, or they're loading up on the passive side, given the amount of effort that the buyers are having. We don't really know who's buying. We can say that it's a short squeeze, but that's a bit lazy. We'll need a little more context, and we really just don't know. We don't know why all these buys are happening. You just don't know. But the they're not getting as much reward as they would like, but their current positioning is very threatening to the sellers. Okay, so we'll look a little deeper and look at the market profile, starting with the S&P 500. There were some singles from September 3rd that they were able to eat through. So those have been removed. And I think there were some more singles, but I think we already cleaned those up. No singles for today. There was a big fight at the 70s that they couldn't get past. Once they finally broke through, they were able to hold it as former resistance turned into support on a swift retest down to those late 70s. So really not too much to speak of. A lot of fight to get over this hump, this low volume node, and once they broke through, they tested the above the 5600s area, and they're pretty much hanging around that area. So very very solid for the buyers for the S&P 500, and we do have this big bad zone, this 5650s to the 5600, which is where we all know this area. We all know this area. It's the most traded area since the middle of April. So we all know this area. Everyone is quite familiar with that zone. Nice overall from the buyers. Looking at the same situation on the NQ, of course, they were dealing with theirs below the 400s, really trying to burst into the singles areas. They were eventually able to get through. Same with the S&P 500. It just took a lot of work for them to get through, but once they pulled through, they're able to use that form of resistance as support. So very solid day. The majority, well, all of the singles have been eaten up from the 9-3. So really not too much to show here. This is really like a B-shaped profile, but it shows. I think the volume point of control is actually near the highs for the S&P 500. It's at the lows here or it's near the bottom third for the NQ. Majority of volume was done near the lows. It was just really towards the end of the day. The S&P 500 held they're very strong overall. So if you just look at the profile that we have here for this weekly candle, and then the monthly composite that we have so far, which is just last week, you can see just a lot of volume was done here at the lows, a lot of fighting, and we're just like bursting through, leaving singles. So I mean, we're not gonna save this chart book here. So we're just gonna merge these for right now, just for our viewing purposes. See just a lot of effort done down here, and we're finding our way back into balance. So again, this just feels more like balance trading from what we can see. Really nothing too sexy going on here. No one really wants to trade at these lows. Given the opportunity, we're drifting our way back up. If we want to look at this a little more contextual on the intraday basis, looking at the 65-minute candles, you really can't see too much given the compression day, but you can just see that these sellers were trying. But to no avail. Ended up being squeezed. Same as yesterday. Really not too much to show there. Fairly simple. You can see it been squeezed this whole time. Higher highs and higher lows. Basically like a freight train at this point. Same situation here for the ES, except there was more passive sellers in here and in here and in here as well. Even here towards the end of the day, a lot of passives are stepping in, but passive doesn't really mean anything. If they're not going to be aggressive, they're not going to push price down. So we don't know who's passively selling. We don't know who's aggressively buying. It's just happening. So say what you will. Looking at the 138-minute candle, you can see that we are getting above almost to this 500s here, which is just this high cluster zone. Again, what is it called? The The Nasdaq, oh, forgive me, the Nasdaq was doing the lower highs and lower lows, um, compared to the S&P 500, which was more balanced. And we are just now revisiting the majority of that zone. Again, we were just looking at this on the footprint. So we're almost there, just not yet. So it just seems like a lot of effort, a lot of grind to get to that point. Once we get through, it's a good chance we may have like a blow off top. But again, we won't be too speculative for this nature, for this situation here. And then the same situation for the S&P 500. This is that balance zone that we were kind of talking about, not the straightest lines, but as you can see, we are well into this range here and really starting to um, revisit some of this balance zones that we were talking about. And you can look at the charts. You can look at the drawings if that helps at all. All right. So we have the 3 minute candles. I'll go ahead and mark up the SOC zones. All right, I was able to get those drawn. Just pause the video. We'll start with the NASDAQ. So fairly simple. We are trading two-way trading at the highs from the prior day, which was the short squeeze from CPI. Again, NASDAQ has been a little stronger from what we've seen. Two-way trading into the RTH. We had our PPI, a bit of a bearish candle, drifting lower into the RTH. Tried to test that midpoint, that close. The open of the SOC candle. Found our way selling off to begin the RTH. Found some support near the highs, so really not too much ground was given up from the buyers. As they fought from those lows, we burst through this SOC range, and initially testing it, pulled back just a little bit, but completely burst through. That was a sign there. This was a day where you had some random scares, big impulsive candles. This was a bid pull. We saw this in real time. This pulled down extremely quickly, tested the open to the tick, and then found some trading a little above, going back through the SOC range, which sold off again back to the open, which again burst through the SOC range, except this time we created a new high. And then another leg back into the open. So at this point we had one, two. Of course, once we bursted through this SOC high and then the overnight high, we ended up testing the open one, two. We'll call this 3 times. We just could not trade below this open at all, which is right below the SOC low. Anytime we would break under this range, once it was reclaimed, we would immediately get back in, fight, immediately get back in, and then drift above this 5 smoothing average. Smooth really for the rest of the day until we had, a little turbulence towards these highs. A big sell off, our first exposure really under this 5 smoothing average, completely eaten up. And then we really just hugged the 5 smoothing average for the remainder of the day. Same situation here for the ES. Again, they were a bit weaker. If you look at the RTH session only, the CPI low ended up testing almost at the low for the non-farm payrolls, which is where the beginning of the squeeze happened in the first place. So same situation, two-way trading in the overnight session. We have our PPI. They're still much more weak, but relatively still strong as they're finding support still near their highs from the prior day. Same situation, work our way back to the SOC low, but it takes them much longer for them to hold, given it's just a different product, different structure, different participants, so on and so forth. As we hit this SOC midpoint, starting to bounce between this open, the SOC low, midpoint, SOC mid, open, couldn't get the IB mid again, crawling our way back up to the SOC low, testing the open off a quick rejection, And then we really just found our way back above the SOC high. And once they broke through, pretty much smooth selling, ran into a little turbulence, and then we had that big down spike on both indices. Same situation, really just held the 5 smoothing average for the remainder of the day. So fairly simple day, not really too much to speak of for the price action, just resilient buyers. They were not giving up any kind of ground at all. If we have to call the plays of the day using our playbook, using our setup, it's really quite simple. If we know that this is an extremely bullish day and we are finding our ways below it, there's really no reason to sell to the. There's no reason to be a first seller when you have hurt sellers that are licking their wounds and willing and needing to get out as soon as possible. So you really should look for a way to buy. We have no reason to buy below this SOC low. So what you can do, or what we plan is to have a buy stop at this SOC high. Given this was completely untested, this whole RTH up until that point. So really, the easiest trade would have been here. If you're looking at the ES, or even here, given the context, but we're not always at our screen at this point, nor are we here, but you can just leave a buy stop here and just see how it goes. A tighter risk, maybe like a half a rotation, maybe about 3 points there, and we would see how that went in real time. I would really prefer to been there to put that stop down, but it is what it is. If you're gonna go long, really NQ was the better option. I'm actually gonna put this on just the RTH only. You had multiple attempts with those open retests that we were looking at. So maybe if you didn't feel comfortable being in this on one, you even had your second attempt here. It would be better for you to get in near the actual opens, which is fairly difficult. So if you just wanted to wait until we had our grind lower to our SOC low, and we also saw that during this time, the S&P 500 was finding their support above their IB mid. I can use this as a correlation play, just as a reminder that, hey, you can long this here when you see the weaker product that's beginning to find some support as well. So you can easily get into some of this here, given the context of what we have, and easily just risk this IB low. I think this is IB mid. This is about 20 points here, from about the 60s to that's about 25 points. Even if you got in here, at the SOC low, that'd be from 75 to 38. So if we just call that like 40 points, yeah, that's a fair amount of risk. But us looking at the DOM, we'll be able to cut that in half depending on what's going on, especially more in this area here. So just a reminder for myself, really targeting, honestly, the highs here, especially, and you can get in and possibly add once you see that we started riding this 5 smoothing average, specifically this candle here. Any kind of pullbacks below this 5 smoothing average, we really need to be one of these buyers that's testing these, especially on these pullbacks below the 5 smoothing average to the damn IB high and the VWAP for the session. Just saying. All right, so we'll go ahead and call it there. Let's switch back to our higher view. Just one moment. All right, so we just had to ask ourselves, how did the buyers do, as they have been in the momentum and they have been just doing fairly well from we can see. I think the buyers did a swell job. They warded off any kind of sellers. They continued to push throughout the day, and they closed near their highs. We're going to have a little bit of lighter data coming tomorrow with the IPIs, and then even Monday being lighter, and then Tuesday being retail sales, which is the last bit of data before the FOMC decision. I have no idea what that's going to look like, but I would imagine it's going to be a bit volatile. So we won't speculate too much because we'll need more information. But as of right now, the buyers are in control on a higher time frame. They have better positioning and structure, but for the most part, the bullish sentiment and the bullish structure, the bullish momentum rather, and the bullish sentiment is definitely on the buyer side. And the more that they build volume higher and the higher time that they spend, we have a lot of trap sellers below us. So that adds another advantage to the bulls. So the bulls, as of right now, will be kind of in control. The only thing that would change that is if we have some trading below if we get back into the 70s for the overnight, which is really going to be like a 30-point drop. It can happen, but you really want to see the buyers hold the 55.90s, if anything. We can find a better example on the yeah, about the 90s. So yeah, the buyers can hold between the 55.90s in the overnight session. Then I would imagine there will be the favorites for tomorrow. In the event that they sell off a little bit, I believe we're just going to see a little bit more. We're going to see a bit more balance. Any kind of runs to the downside may or may not be quickly bought, but we'll see. We need more information. We need more catalysts. We need more context. But as of right now, things are getting interesting. We may see a bit of balanced trading as we head into the FOMC. All right, have a good night and see you tomorrow.